more. We got Natalie from San Diego. She goes, hello. My brother and I have property for sale in Pacific Beach, and we have an interested buyer. After all is said and done, we'll have just under $600,000 in hand and want to do a 1031 exchange. Can I get a multifamily?
I can get a
I
multifamily.
can get.
Oh, I can get a multifamily that has high cash flow. It's a priority for me because I depend on this monthly income, but I don't want to deal with constant hurricane damage. All right. I've been told I can get a property 10 to 15 miles inland in San Diego, upgraded, and it will yield higher cash flow than something on the beach. I've heard. I have a hard time believing that. If I were to take out $1 million loan, I would get any cash. I would get any cash flow after paying off the loan and possibly upgrades. The other option I was thinking is a triple net lease, but I'm aware of the risk associated with those. Not getting a good location, not backed by corporate, if the tenant goes bankrupt, et cetera, et cetera, et cetera. So let's talk about a couple of things. Alan, you've been a real estate investor for quite some time.
Yes.
And when you're looking at a property for cash flow, I guess one of the things that you have to look at is just what's the market value in the particular area that you're looking at. In my opinion, and my opinion is only gauged on the information that you have given me over the years.
Let's see if you remembered it correctly.
Yes, but San Diego is not really great for rentals because the market values are so high, and especially if you're looking to get a single-family resident or something like that, maybe a duplex on the beach. I don't know. That's going to cost you a couple $1 million, and I don't know if the rents are going to cover that. So she's right on. She's like, you know what? I don't believe it.
Right.
I don't see how I got to put in more money into this thing. I got, $600,000 from this. I can exchange that, buy this place, have a large note. How is this thing going to cash flow?
Yeah, and I agree with that, but I will add some more tidbits.
Flavor?
Yes, because single-family homes and condos in San Diego, I'm just talking San Diego right now, they're going to have probably, in general, the worst cash flow of any real estate. A duplex tends to have a little better cash flow. Triplex even better. Fourplex even better. You get to 5 units and up, it's a commercial property. Now you're buying a property more based on cash flow than you are market value. And so you tend to get better cash flow on units, 5 units and up. Part of the reason is it's harder for people to buy because they have to get commercial loans. They have to put a lot more down payment. So, and then another factor is, and this might sound kind of weird, but the lesser the neighborhood, in general, the better the cash flow. So if you've got a place in Pacific Beach, you're probably not, you don't have very good cash flow relative to, let's say, a place in El Cajon. And no disrespect to El Cajon, but it's just that closer to the beach, you generally have lesser cash flow. Inland, you have better cash flow. Now that's kind of some general things to be aware of. Now within that framework, every single property stands on its own, and you got to look at the neighborhood. You got to look at the financials. You got to look at, can I increase the rents if I do some little improvements? In a lot of cases in San Diego, you can get a decent cash flow with units if you get a good enough deal and you put a little bit of money in and you can raise the rents and kind of turn this thing around, kind of put a little bit better active management in it. It can work, but it is a lot of work.
Triple net lease?
Triple net lease is, I agree with her concerns. I mean, if your triple net lease is Starbucks, you're home free because Starbucks they don't franchise, it's a corporate guarantee, but you don't get a very good cash flow. And in fact, I just saw a client that had a triple net lease with Starbucks in Texas, and the cash on cash was 4%. And Texas usually is
6 or 8.
6 or 8 or 10 even.
Right.
So Starbucks in San Diego would be, I don't even know, probably 2.5. I'm just guessing. I don't really know. But yeah, I'm not a huge fan of triple net leases just because of you got one tenant, and if they leave, if they vacate, probably it's a franchise. It's based upon the strength of the franchise. You might have a vacant property for a year or longer.